The jig is up. So the reason why interest rates are low across the world and the reason why central banks coordinate with each other around the world for policies like quantitative easing is the idea that they will all be cooperating and there won't be anyone breaking away from this essentially cartel. But now what's happening is that people like Ray Dalio over at Bridgewater, his hedge fund, or Michael Saylor at MicroStrategy are saying, you know what, we're not going to play the game anymore. We're actually going to borrow money at these incredibly cheap rates, and we're going to buy assets. It could be Bitcoin, could be something else, and we're going to stage essentially a speculative attack on these central banks. So the central banks have overplayed their hand, and now they're inviting these huge pools of capital to openly attack them. And now this is rippling through the financial world, and Ray Dalio is the biggest hedge fund in the world, and he's saying, look, there's no point in owning a bond. So others are saying, look, this could be the end of a 40-year bull market in bonds. If you're only going to get 1.6% nominal yield on a bond, and inflation is racing ahead, and the real rate of inflation, remember, is 10 to 12%. Not the 1 to 2% that the government says it is. That's a lie. It's provably a lie. And so why not borrow at a 1% when you know, based on just the minimum amount of inflation in the economy of 10%, you're going to make 1,000% on your money by just borrowing against the Fed, by attacking the Fed. Who's not going to take that trade?
On the one side, we've covered all their deplatforming and authoritarian sort of drive towards silencing voices that are against theirs, and silencing people who are against free money printing, by the way, is going to possibly be something that they're against. But once you go brrr, you never go back, right? Here is something I saw trending, and you can see it, get my payment. That was trending as everybody wanted to know. They were tweeting at Biden saying, when am I going to get my payment? When am I getting my money? Where's my money? Remember, this is the theme going forward. This is what Ray Dalio sees. He sees that this shift in consciousness, why do we need to pay taxes when you could just print? Give us more money. You did it last year, you could do it this year. Why do I have to go back to a job that I'm going to earn like 20, 30, 40% less than I was making sitting home?
Right. Well, markets are like natural systems, and it only takes a 1 degree difference to go from solid to liquid, to go from ice to water. It's just a 1 degree difference. And with markets, if you just have a 1 degree difference and you're saying, you know what, instead of getting a positive rate of return on my bond market, I'm going to get a negative return on my bond market. And that could be even 1 basis points different, 1/100th of a percentage. It moves the entire psychology of the market, flips it 180 degrees. And now instead of all these hedge funds and central banks cooperating to keep that status quo going, they're now attacking the central bank and the money printers with this borrow to spend on assets, change. And we see that reflected now in the commodity markets that are now entering a bull market, because paper and fiat money is now turning into trash, as it has in some of these emerging markets like Venezuela. And assets like Bitcoin are becoming the go-to asset to protect yourself against, as Michael Saylor of MicroStrategy calls it, the melting ice cube on your balance sheet. Cash is losing, according to MicroStrategy's CEO, Michael Saylor, 15% of its purchasing power per year. Why would you hold on to something like that when you have a Bitcoin that's appreciating on average 200% a year for 10 years? It's a pretty simple trade once you see the raw numbers.
Well, speaking of raw numbers, I have some raw numbers from Bank of America, and it kind of goes with the data I showed you from Twitter versus what Biden is doing and what Ray Dalio is doing. So Ray Dalio is saying he's borrowing to invest in real assets because he sees Biden, before that Trump, borrowing big to give to people, pour it into bank accounts of everybody so they seem fair, right? But in fact, it's going to a huge percentage of people who don't actually need it. And you can see that in the data in terms of what Bank of America did. So then they pour it into Bitcoin. So like 400 billion is going out last week and this week. And what you're seeing is Bank of America found that about 10% of that is going to go into Bitcoin. So 40 billion pouring into Bitcoin, a real hard money, right? People are taking the borrowed money that basically the US government is doing this technique of a speculative tax on the dollar themselves. So the survey of investors by Bank of America shows that more than half in each income bracket from 30,000 to 120,000 plan to save their third stimulus check. For the lowest income group, substantial portion then goes to food, clothing, and necessities. So look at that gap. 53% is all that the people earning under 30,000 a year. Those people can only afford to save 53% of it. The rest is going on food and rent. So that's the gap between 53% and 79%. So slowly, those who are earning 120,000 feel very good about themselves because they told Biden to give these $1,400 and $3,600 for children under 6 and all this stuff. But it turns out they made sure they're getting the money too, and it's all going to them building up assets, building up the wealth that Ray Dalio himself is also doing. So they get to act like Ray Dalio. These guys at the bottom will always be the investment at the top is causing the inflation, right? The money printing is causing inflation. So it's going to be running in place for the bottom 30 people earning under $30,000. And so you see it in the actual data, like what happens, the discrepancy, how the wealth and income gap keeps on going further and further and wider, despite you being so supportive of these policies that actually cause the situation, destabilize the situation.
Right. Well, this also tells us something remarkable. Up until maybe a year ago, that bottom distribution of money to under 30,000 would have been 100% spent. None of it saved at all. And that would have increased the so-called velocity of money. And the Fed could look at the velocity and say, you see, we're causing growth. But now what we're going to find out is that this money printing is not going to increase the velocity of money across the board, because even those making under 30,000 have been educated by the Bitcoin cyber hornets that saving money, like what they do in the 100, 200, a million, $10 million income class, is in assets that go up as they print more money, is the escape valve, as Christine Lagarde calls it. So now the cat's out of the bag. Now even people who are dirt poor are going to put some of that free money into Bitcoin because they realize that the government is trapped and that Bitcoin can only go up in value, and that'll make the money velocity not go up, which will make the government in turn print more money. So this is a beautiful situation where those who are saving money, like Ben Franklin did, penny saved is a penny earned. Suddenly that lesson is writ large on the 200 million, 300 million Americans who are saying, you know what? Ben was right. The Fed, like Franklin said, the reason we had the Revolutionary War of 1776 was to get rid of the Bank of England. That was the primary reason. Here we are in 2021, finally understanding that lesson across America, coast to coast, 330 million people saving and saving more.